Alright guys, so at this point, the US chip war is on the brink of collapse, and we don't mean China is on the losing end. It's the US making all sorts of mistakes in this confrontation. Now the stakes are actually extremely high. Chips power AI models, and AI models help to drive much higher productivity when used right. So whoever maintains a huge lead will essentially dominate almost all industries. Now you have EVs to renewable energy to robotics. All these are enhanced by AI. But to win the chip war, it's not that simple, is it? Everything has to go right, and the US seems to have a habit of crippling their own efforts. Now, just yesterday, Nvidia just released their earnings and they look solid. Their sales grew by 69% versus a year ago and brought home $44 billion. But under the hood, there's a growing problem. The company lost up to $10 billion in revenue from Trump's decision to ban the H20 chips to China. That's how much money is left on the table, and if we flip everything, that's how much money Chinese giants like Huawei can earn from their domestic demand. So, as a US company, you want to enter the Chinese market now and flood the entire ecosystem with your own brand of chips. Go and get market share, get customers hooked onto Nvidia's architecture, and make it harder for Huawei to compete. And Jensen Huang just made it extra clear in the earnings call.
China's AI moves on with or without US chips. It has the compute to train and deploy advanced models. The question is not whether China will have AI, it already does. The question is whether one of the world's largest AI markets will run on American platforms. Shielding Chinese chip makers from US competition only strengthens them abroad and weakens America's position. Export restrictions have spurred China's innovation and scale. The AI race is not just about chips. It's about which stack the world runs on. As that stack grows to include 6G and quantum, US global infrastructure leadership is at stake.
It's something that we have known all along. Export controls and chip restrictions just strengthens Huawei even further. It lights a fire under them to innovate fast and get everyone in China to use their products. And here's the problem with fighting a chip war or any other industrial war with China. You are battling an established ecosystem that drives the cost of production down. Nvidia's profit margin today is still incredible, sitting at 49%, and that's over 3 times higher than the rest of the S&P 500. But remember the situation, there isn't serious Chinese competition in AI chips just yet. This is just like Tesla in the early 2010s when Chinese EVs were still struggling and they were not mass market yet. But look at where we are today. Sooner or later, Nvidia's margins are going to come crashing down. And if they don't rake it in now and gain customer dependency today, it's going to be game over tomorrow. It's really obvious cutting yourself away from the biggest chip market isn't sensible, it's just downright risky. But history is about to repeat itself once again. Trump is moving to impose yet another round of export controls on China. We have disturbing reports that the old playbook is still the new playbook. Nothing has really changed. The Commerce Department is moving to tell electronic design automation providers to stop selling stuff to China, to halt their shipments to Chinese customers. Now, the impact of this is quite significant. EDAs are essential to design complex AI chips. Companies use it to model and to simulate how chips will behave once manufactured. In other words, it helps you beta test and develop more accurate chips. Manual design is quite impossible here. The game plan once again is to slow down China's semiconductor development to increase production costs for companies like Huawei. Now, Trump knows that China has a very robust supply chain. Cost production is low and talent is very abundant in the country. So he wants to place big hurdles for Beijing to jump over to make advanced AI chips. And here's where things get interesting. Synopsys, Cadence, and Siemens are the main suppliers. These three companies provide China with the majority of its software needs, around 80% of the entire Chinese EDA market. In 2024, Synopsys China revenue accounted for nearly $1 billion or 16% of their revenue. And here's the question, will these companies follow US orders to hinder China's progress? Because if they do, it will be the same end result as ASML, Nvidia, and Tokyo Electron down the road. They will leave a ton of money on the table and it will piss off the Chinese. More importantly, it will trigger renewed competition in the entire Chinese chip ecosystem. And China is already building it out. Huawei is the leading AI chip company in China today, and they are backed by a mountain of Chinese support that extends throughout the entire supply chain. From chip fabrication to developers and chip makers, they're all getting support from the Shenzhen Industry Investment Group. And now that Trump wants to ban EDA software to China, another company will step in. Empyrean Technology only holds 6 to 8% of the Chinese market today. And with Trump's ban, we can expect them to get additional support from the central government. So how long will it take to replace Cadence and Synopsys? It really depends. Now some say it will be 5 years, others say it will be 10 years. But history has shown that China will probably close the gap much earlier, especially when they have AI tools like DeepSeek to automate a ton of the R&D. So Trump is making an all or nothing gamble. Either the Chinese supply chain will collapse over its weakest link, or it will get even stronger than before. And my guess is that it will be the latter. China will get even more self-sufficient than ever before. Now, Jensen has made it very clear that China's market is more than just its size. Yes, it's very big, but there's also phenomenal talent that can get the job done.
The US has based its policy on the assumption that China cannot make AI chips. That assumption was always questionable, and now it's clearly wrong. China has enormous manufacturing capability. In the end, the platform that wins the AI developers wins AI. Export controls should strengthen US platforms, not drive half of the world's AI talent to rivals.
So companies like Cadence have to choose. Stop selling to China means losing interaction with the biggest market in the world. It means Empyrean technology getting strong and eventually catching up. And when they do, we can expect yet another half price off sale at an even better quality down the road. When China walks into the room, prices suddenly crash down to earth. Your profit margins are gone. And to make matters worse, the administration is now going after Chinese students. Marco Rubio has confirmed Chinese student visas will be revoked, especially those studying in critical fields. And by that, he probably means in the STEM fields, including AI, computing, and biotechnology. Now, sounds great, but not for the US. It sounds great for China. Now we can expect a bigger brain drain from America to the rest of the world, especially to Asia. While a lot of attention is given to universities like Stanford and MIT, Chinese schools aren't exactly lousy. Now, we have covered before how places like Tsinghua and Peking are world class as well. But what's guaranteed is a migration of talent from the West back to the East is an educational tragedy that will just torpedo the entire US chip war. In the early 2000s, 60% of total STEM graduate students were US citizens or permanent residents. However, in just 17 years, things changed significantly. Over 46% of those in STEM programs were visa holders. Foreign students, including those from China, they make up nearly half of the student body. So Trump is really playing with fire here. Many of the students studying in America would eventually settle in the States because their entire life is built there. But if you don't even allow them to enroll or you just throw them out, the odds of them relocating here has dropped to zero. Now, I'm not saying that the US students are incapable, but you need global talent to raise the bar, to get the best around to challenge the faculty and set a higher standard. We are witnessing the start of a dangerous domino effect. According to the National Center for Science and Engineering, the US STEM workforce requires a ton of foreign-born talent. This is especially true in computer and math scientists in the doctorate level. Now, these are workers you need to advance the chip war and stay ahead of the game. And nearly 58% of the workforce here are foreign born individuals. So, if you throw out the Chinese students today, do you think this number will drop tomorrow? It most definitely will. The brain drain has already begun. So, as the US cripples their own chip war, things are not looking so good in the tariff war either. The US Trade Court has blocked Trump's Liberation Day tariffs, at least some of it. But if we look at the ruling, not much has really changed. Less than $15 billion worth of tariffs were struck down. The big one, Section 301, is still in effect. Over $23 billion in tariffs to Chinese products, the steel and aluminum tariffs are still there as well. So the relief rally on Wall Street and US stocks might be overdone. Everyone is hoping, everyone is praying for US courts to strike again to dismantle even more of Trump's tariffs. But it's not guaranteed, so you have to hold your horses here. By now, we know Trump's game plan. He wants to reshore everything, and he wants to do it in a hurry. And to accomplish that, you need tariffs. But there's also his temperament. Trump doesn't like to lose, he likes to win. He's a winner, right? He's the person who tells people they are fired, and he won't let go of this reality show. This season of The Apprentice is not done yet.
And Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threats, and that's why markets are higher this week. What's your response to that?
You mean because I reduced China from 145% that I set down to 100 and then down to another number? And I said you have to open up your whole country, and in many ways, I think we really helped China tremendously because, they were having great difficulty because we were basically going cold turkey with China. We were doing no business because of the tariff, because it was so high. But I knew that. But don't ever say what you said. That's a nasty question. Go ahead.
Just based on this alone, we can tell Trump is not going down without a fight. He's going to appeal the decision and find other avenues to implement his tariffs. So we aren't out of the woods yet. The stock market believes the trade war is done, but the bond market never lies. They know the danger is far from over. Even after the court decision, yields on the 10-year rose well past 4.5%. They know tariffs are still going to stay and higher prices are still coming for consumers. And if the US economy is in a clear, borrowing costs should come down, shouldn't it? Investors should be piling in, but that's not really the case. Every loan in the US is more expensive today, and that also extends to the rest of the world as well. And it's important we get this right. Will the tariffs disappear or not? And whether you're an investor or just a regular Joe, this is going to affect you. Trump is not going to take this lying down. Wall Street giants are sounding the alarm bells. Goldman and Morgan Stanley are telling the world that Trump still has many tools left. He can extend the duration of the tariffs or find loopholes that the courts possibly can't touch. So we have a breaking update. The appeals courts have given Trump a temporary reprieve from the ruling, so the tariffs are back on the menu. But the White House is not done yet. Trump wants to execute his full agenda and roll back everything for good. And here's probably what's coming. The Dream Team can still use what's known as sectorial tariffs, and those are the levies on steel, aluminum, and auto imports, targeting specific products. He could ramp the pain up by 7.6% across the board using Section 232. He can also apply Section 122 that doesn't require an investigation. That allows him to impose tariffs of up to 15% for 150 days. Guys, that's like 5 whole months. By then, the entire economy could have collapsed. What this won't change is the big, beautiful bill. Now, the $3 trillion tsunami is still going to sweep across the US economy. Issuing a ton of bonds at this point is really risky business. It's another reason why Trump can't afford to drop the tariffs. He needs the revenue there. In May, US Customs collected over $22 billion in tariffs. That's how insanely high the rate was and how much imports US consumers still rely on, especially when it comes to stuff from China they're still buying. And if this figure keeps up, Trump could collect over $260 billion a year to fund some of the tax bill, which is quite hilarious actually. Consumers are paying tariffs to fund the big beautiful bill, which is going to help the rich more. Now, I can't confirm this, but maybe that is the agenda because it all boils down to one simple fact. The majority of tariffs are paid by consumers and importers, so Americans themselves are funding a good part of the bill and the rest is thrown on a national debt. So welcome to this big beautiful mess, and it's going to go global. But let me know what you think. How soon before China catches up in the chip war? And can Trump fully overturn the tariff ruling? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.